Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com, and this is a technical preview for the week of September 22nd, 2014 for the pound versus US dollar. Really? Maybe so. And what I refer to as the action in this currency pair in trading not only this week, but more specifically today, as we head into the weekend, and some of the surprises that I guess we've seen in the action here today. And I want to take a look at that action, that price movement, and divorce myself, if you will, from the emotion, okay, and instead look at where we stand from a technical perspective and what the market is telling us using the price and the tools that I apply on a daily basis as to the bias and also where the pound should be. And we know, just as a recap, that the price of this currency pair has been moving sharply to the downside, especially in the early part of this month. You can see that these days, 1, 2, 3, 4, 5, 6, 7 days, took the price down from about 166.5 all the way down to 160.5, 600 pips to the downside in 6 trading days. Included within that move was a gap lower here. This was off of a weekend where polls started to show more of a yes vote for Scotland forming their own country. And that was a huge worry to the market and forced the market all the way down to the 160.50 low that we saw this month. Well, we started to rebound as the market became a little bit more comfortable with the idea that, well, maybe, although the polls may be showing a closer vote, the voting money or the betting money was not. It was starting to get more and more in favor of the no vote, and that's where the real money is, not in these polls that poll 1,000 people who get emotional, and there's also a lot of people who are undecided in that vote. But the real money, the betting money, was going toward the no vote. So we started to see the rebound, and that rebound higher took the price back above our gap here from the weekend. Didn't really close above that gap until Thursday's trade, when the market really surged to the upside just before the vote on on the day of the vote, and before the voting results came in last night, at least during my time. And the move prior to the results even continued that momentum to the upside, moving above the trend line for the first time. That's bullish. We moved above the high going back to the month of March, or the low going back to the month of March. We moved above that level at the 164.61. We moved above the 38.2% retracement of this move to the downside at 164.85, and we fell short of this these lows right here, these triple lows right here, where the market found a little rebound up into our trend line right here. So we fell short of that, but still big run to the upside here as the votes started to come in, and the votes started to be no, 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 no. So we're not going any lower, right? We should keep this bullish momentum going. I would be a little bit more skeptical if the market moved up to the 50% retracement level. After all, the U.S. hasn't been doing all that bad as well, and so the U.K. and the pound are kind of on the same wave path. And maybe this move up to the 172 level was a bit overdone to the top side, but certainly it doesn't deserve a move all the way back down toward that gap that we had on the yes vote idea. Did it? Was it really real? Could it happen? Well, indeed, it did start to happen. We fell below the 38.2, fell back below the 61 level, fell back below the trend line, and fell back to nearly the really a lower closing level than we saw that Friday before that poll came out that said the yeses were taking control. Does the pound versus US dollar deserve to be down here? And I bet if I asked 1,000 people before the results last night, we're going to get a no vote, and the no vote's going to be overwhelmingly in favor of the no's. And, not that it really matters. It could be one vote above it, and it would still be a no. But where would you think the pound would be? Would it be above the trend line? And a lot of people would probably say yes. And maybe there'd be a few people who say, no, we're going to go below. But if I asked them and said we would be below the closing level on that Friday before the gap, when the polls all said yes, 1,000 out of 1,000 people would say, no way. Well, yes way. The market is closed below the level from the Friday before that poll weekend. Who would have thunk? Does it belong here? Well, from a technical perspective, that's what I care about. And from a technical perspective, we're back down below the trend line. We failed above the 38.2. We failed on the move above this line right here, this old low from March. And so from the technical bias off of this daily chart, it's negative. Now let's take a look at the hourly chart. And this morning when I came in and saw the market back down at this trend line, I said, this is an opportunity to buy right here. Look, boom, 1, 2, 3. And the market did, in fact, move higher. The price moved from this low right here, 163.19, all the way up to 163.63. And it seemed like the pressure might be off, that the low was reached and the market had the opportunity to move higher from there. After that, we fell below the trend line, though, and came down to the next key support level, the 100-hour moving average. And at this point, I wrote, this is a buying opportunity. We have the 50% retracement level down here as a backstop. We shouldn't go below the 50% retracement level. This just makes sense as a buy level. But I wrote, we need to get back above this trend line right here to take the pressure off this selling that is occurring here. We need to get and take back this technical level right here, at least, and stay above that level. And if we can stay above that level, we can start to build more confidence and get the momentum moving back in the upward direction. Well, the market moved right up to that underside of that trend line right there, that broken trend line, and instead of finding buyers, we found sellers. Couldn't get above that level, and the market came back down to the 100-hour moving average and then spent about 3 or 4 hours there trying to hold above support, hold above support, hold above support. We're not going below the 50, and then lo and behold, in the last hour of trading, what did we do? We went below the 50% retracement level. All bets are off. Time to regroup. Coming into the weekend, let's reevaluate and look at it on Monday. Well, I'm looking at it right now for you, and what do I see from a technical perspective? The bias is to the downside on the hourly chart as well. We're below the trend line. We couldn't hold that trend line. We couldn't get back above that trend line, and we fell below the 100-hour moving average. So, I listen to what the market says and listen to what the price says, and if the price is wrong or the market's wrong, they'll take the price back above the 100-hour moving average. I can guarantee you that. But until they do, it's not really bullish. If at best it's neutral, because we're in between the 100-hour moving average and the 200-hour moving average and above this trend line, so we got that going for us. All right? But until the price can start to move back above these levels from whence it came and from whence it broke, then I'm not convinced. I'm not convinced yet. Now, is there a chance that we move back above on Monday? Yeah, but get me above that level first, and then we'll talk about it. And then we'll talk about being bullish. It's not about what we think, folks. It's about what the price and the tools are telling us. And if you listen to what the price and tools are telling us, you're going to be better off because of it. Now, the levels that we're going to be watching in next week include this trend line right here and the 200-hour moving average. That's another key level that, folks, we got to stay above this level if the bulls are going to stay in control. If it moves below that level, we're more bearish, even more bearish than we are right now, being below the trend line, being below the 100-hour moving average. That's not far away. It's only, we're talking about the 53 level, currently 89, so 26 or so pips away from that level. Move below that level and it's more bearish. Stay above it, and we're still hoping for the market to get back above the 100-hour moving average and get above this trend line here, which is going to be moving higher as time goes by during the week. So we need to start to show, if the bulls are going to take control, we need to start to get back above those levels and prove that you can take control. Now, one final look at a weekly chart, just to put things in perspective and think of that idea. Well, maybe so, Really? Maybe so. Looking at the weekly chart here, we did come down to the 100-week moving average in last week's trading when we reached the low of 160.50, and we bounced off of that 100-week moving average. So there is some positive there. But what I want to do is look at these yellow areas right here. These yellow areas are aberrations, if you will, of what has happened over the last six years. Over the last 6 years, most of the time, the pound sterling has been below these yellow areas here. All right. Most of the time, the pound sterling has been below these yellow areas here, and so when I look at the daily chart here and outline, that line right here, it comes in around the 163.07-ish type of area. Now, we are right around that level, currently trading around 162.89, and we need to. Maybe the fact is that this is an aberration, like these were aberrations, and the pound sterling really belongs below that line in a neutral type environment with the U.S. And if we start to put the idea that the U.K. and the U.S. economy are closely linked right now, both enjoying some growth, probably going to be the first countries to raise rates, probably do it together or within, if all things go along as planned at around the same time. And so where does the price deserve to be? Above here? These areas where it's more of an aberration than a reality, or should it be more toward the midpoint of this range? Maybe 157, 160, somewhere around that level. Maybe right around the 100 and 200 week moving average and see what happens there. That's in the back of my mind. It has me thinking. But the price is going to tell me what to do, and the price is going to tell me what to do versus the 100-hour moving average and the trend line, and that's what I'm going on in trading next week. So there you have it. If you like this video and want to see more of them, please come to our Forex Live YouTube station and click on subscribe. And please also visit our website every day. Click on all our links, read our posts. You're going to learn a lot, and you're also going to find some good trade locations and good trades. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.